I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's a Managing Director on Nasdaq's Market Intelligence Desk. My favorite hit of the week, Chris, as always, because I know we have wrapped when you are on with me, and stocks ending the week on a green note following robust jobs data. Walk us through that.
Absolutely. You know what? Christmas is only 2.5 weeks away, and we get a very early Christmas present from the Labor Department today. Non-farm payrolls came at 266,000, well above the 180 expected. More importantly, October and September both revised higher, especially that's significant because of the GM strike. People were kind of concerned about that and how it's going to affect it. What you're looking at here is strong job growth. Again, yesterday with the unemployment numbers confirms this. The ADP number on Wednesday was a little out of whack.
What was the disconnect there?
It was a little bit of disconnect, not really sure what that reasoning is, but what you're looking at here now is that you're seeing consistent, the unemployment rate tick down, which is good. The underemployment rate tick down, which is even better. Wages are seeing pretty much consistent year over year growing, though we did tick down 0.1% from last month. Overall, it's enough to send this market higher, and more importantly, at the moment, the S&P 500 is looking at a weekly gain, very significant across the market.
It did not look like that on Monday.
Not at all. Look at what happened. And, it goes back to the trade issue, right? Negative headlines on the trade tariffs will impact the market significantly. It is the only factor, no matter what you want to say about the Fed and everything else, it is the consistent factor since February that's been putting the market either higher or lower on headlines with nothing concrete.
But let me ask you about that, though. Do you think that's more of an algo-driven kind of move?
Absolutely.
I can't imagine long,
it's all macro.
Mutual fund managers just turning over their positions on a headline or a tweet.
No, not on the headline, but on the overall theme of it, you've seen a lot of institutional play come out of the market from certain people because they don't want the headline risk. The headline risk will drive the market top line or bottom line one way or another very quickly and then revert. Monday and Tuesday were significant losses in the market. Here we are erasing those losses and looking to close either flat or slightly higher on the Friday, again, only 2.5 weeks to Christmas. So what you're looking at is concern, but until you get something really sink your teeth into, phase one details, it's not going to happen. You had positive comments out of China today. They're going to up the ag and purchases on soybeans and pork. It's a goodwill gesture, as seen by many. And there's plenty of that give and take back and forth. Mnuchin's right there in the middle of it. He says we're going to get something done relatively soon. And if that's the case, look for this market to have legs higher. But again, the devil's in the details. All
right, now you cover retail stocks for the most part on the mid. You had to be happy with that consumer sentiment number at a 7-month high.
Listen, consumer sentiment is a key driver. Consumer spend is 2/3 of GDP here in the U.S., as everyone knows. And the consumer sentiment, especially on the higher income families, was very much more positive. Those are the people who are going to be buying bigger ticket items. They're going to be spending a little bit more here at the Christmas time. Q4 is a make or break quarter for most companies. And Black Friday is when the retailers move from the red to the black traditionally. And with the Cyber 5 being a big holiday shopping weekend, you had over almost 190 million Americans shopping. Spend was tremendous, and you're looking at some really positive sentiments. Yes, you're going to have the haves and have-nots, but the consumers out there spending, and that's the big key driver. Consumer sentiment has been kind of fearful on the back of trade talks, but the way we're moving forward with positive rhetoric.
Right. Okay, let's take a look at our last chart here, the Russell 2000. So when you're looking for confirmation, this chart kind of delivers it.
This is the perfect example, right? So we usually talk about the S&P, you talk about the Nasdaq Composite, the Nasdaq 100, and the Dow. The Russell 2000, which is made of the 2,000 of the smaller market cap companies based here in the U.S. You have the Russell 1000 and 2000. The Russell 2000 is always seen as the laggard and confirmation of the significant move. You have a rising RSI, relative strength index here, and you're trading above resistance level. Brian did a great job with this chart today in our blog. And what you're looking at is higher highs, confirming this move, coming above resistance, looking to retest the highs that we made before December 2018 when the market sold off. If this continues, that's telling you that's a risk-on appetite by investors for not only the large cap names that are leading this market, such as the Apples and the Microsofts, but for all the other equities that are being pulled up in a rising tide. The Russell, this chart is confirming that.
All right, good news to end the week. Thanks so much, Chris, for joining me at MarketSite. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.